On April 27, 2026, China's National Development and Reform Commission formally blocked Meta's roughly $2 billion acquisition of Manus, the AI agent company built by the Beijing startup Butterfly Effect. The deal, which would have been Meta's third-largest acquisition ever, was ordered unwound. Here's the full timeline of how it got there. The story starts in 2022, in Beijing. A young founder named Xiao Hong launches Butterfly Effect and ships an AI browser plugin called Monica. In 2023, Zenfund, one of China's earliest stage venture firms, backs the company exclusively across 2 rounds, lifting the valuation from $14 million to $50 million. In early 2024, ByteDance offers $30 million to acquire the company outright. Xiao turns it down. In November of that year, Sequoia China and Tencent co-lead a Series A at an $85 million post-money valuation. By the end of the incubation phase, this is an independently funded AI startup, backed entirely by Chinese capital. March 6, 2025. Manus launches publicly as the first general-purpose AI agent. The waitlist crosses 2.6 million users. On Chinese resale markets, invitation codes briefly trade for over 10,000 yuan apiece. The next month, the U.S. firm Benchmark leads a Series B that pushes the valuation to $500 million. In June, the company relocates its headquarters from Beijing to Singapore, officially framed as global expansion, keeping a 40-person core team and laying off most of its mainland staff. By mid-December, 8 months after launch, annual recurring revenue crosses $100 million. December 30, 2025. Meta announces it has acquired Manus for what is reported as a several billion-dollar deal, Meta's third-largest acquisition in its history. Xiao Hong is named a vice president at Meta, from a $14 million seed round to a roughly $2 billion Meta exit in less than 4 years. But within a week of the Meta announcement, Chinese regulators move in. On January 7th, Hong Kong media reports that Chinese authorities have begun an assessment focused on technology export control compliance. The next day, the Ministry of Commerce confirms it is reviewing the deal against export control, technology import-export, and outbound investment laws. On March 1st, a new foreign trade law takes effect, strengthening national security oversight of technology exports. 3 weeks later, after talks with the National Development and Reform Commission, both founders, Xiao Hong and Ji Chao, are barred from leaving China. Oversight has now escalated from the firm to the individual. On April 27th, the NDRC formally prohibits the foreign acquisition and orders the deal unwound. The valuation chart tells the financial side of the story. From a $14 million seed in 2023 to a $50 million angel round, an $85 million Series A, a $500 million Series B, and a $2 billion Meta acquisition. 5 rounds in less than 3 years, a near vertical line on a logarithmic axis. Then, in April 2026, that final blue point is pulled back down, painted in red, and relabeled prohibited. From a $14 million seed to a $2 billion Meta exit to prohibited. The valuation chart, taken on its own, is a complete story. But the deeper precedent here is not financial, it is personal. When Beijing wanted to stop this deal, it did not stop the company, it stopped the people. Regulation now follows the founder, not the firm. And that, more than the dollar figure, may be what this case is remembered for.